Good afternoon, everyone, and welcome to Stock Market Today. It's Coram and Justin Nielsen here with a breakdown of the action in today's session and a couple of stocks that we are watching. And Justin, we did see a bounce today, but what do we need to know?
Well, the Fed is coming up on Wednesday, and there just might not be a lot of action until then. I think a lot of people are just not necessarily waiting for something unexpected to happen. They're just waiting for it to be out of the way. So that's one thing. But we'll go ahead and take a look at Dollar Tree, Beacon Roofing, and Marriott today.
Okay, great. Well, first, let's take a look at the major indexes. The NASDAQ today up 1.6% to lead the gains. We have the S&P 500 up 0.6%, the Dow up about 0.25%, and the Russell 2000 up about 1%. So we did see an upside reversal here, Justin, but the trend is definitely lower, and trying to call an absolute bottom is incredibly difficult and not something that we want to try to be doing, especially with, as you mentioned, the potential game-changing headlines that could happen later this week.
Right. So, I mean, this is one of the reasons why we really want to see a follow-through day. It's a confirmation of your rally. So this, to us, just becomes day one. This is where we start the count. So once we get to day 4, that's where we look for the confirmation. And here's a reason why. Go back to 2 days ago. What happened? Well, we had a really strong day, but then immediately followed by an undercut. What about a few days before that? Oh, there was a nice reversal right there. And what happened? We kept on going lower. So again, one day is just not enough. We need to see that confirmation. And even then, we go in slow, and we're really wanting to see a lot more setups. That's something that's really lacking in this market. A lot of what's been driving the market indexes higher has been a little bit of this bottom fishing.
Right.
There are still some pockets of strength out there, but not nearly as much as we had earlier in the year when energy, commodities, the fertilizers were really ripping. So it's a little bit tougher to make progress. And I mean, there's extra volatility. Just look at today. We were down 1.7% on the S&P 500 and then closed up almost 1%. For the NASDAQ, we were down up over 1% and closed up 1.7. So there's a lot of extra volatility. And on IBD Live this morning, we were talking about the volatility in some of the leading groups like coal. If you go and look at coal stocks, I mean, they were down a huge amount the week before, and then they were up 15% this week. So it's that kind of volatility that can be very difficult to play. And, you know, a lot of times it's just best to be on the sidelines during that and wait for things to settle down before you start, you know, putting your money back to work in earnest.
That's right. And also, we should check in on the 10-year Treasury yield because we did hit a key level today on that.
Yeah, it was 3% watch today, and we did hit that level. And I mean, this has been a very big move in the yields. Go ahead and go to the weekly just to kind of put this move in perspective. And this really sticks out. I mean, we certainly had a big move in the yields, you know, in 2020 off of the lows. But you know, here we are again. We based for a little bit, and now we're even higher. So this is something that I think a lot of people are on watch for. One of the ways you can participate in this, of course, is TBT, which is an inverse of the bonds, which that puts you on track with the yields because the bond prices and yields have an inverse relationship. So that's one way to participate, but it's certainly one of those things that you have to be aware that those rising interest rates and Ken Shreve noted that 3%, well, hey, that's the target that the Fed has for the end of the year. So it's kind of a meaningful number for the 10-year Treasury today.
It is. In this trade, I'm pointing out the ideal day to get in. That's where we added it on Swing Trader for a nice move up. Perhaps those treating this like a positions trade are still in it. I have a little piece of this.
Good for you.
But yeah, but it's out of there now. So we'll have to. It's just a shame, Justin, that it didn't come back to quite touch that 21-day line. That would have been nice.
Give people another shot, huh?
Yeah, exactly. All right. Well, we shall see. But moving on to some individual names. So we are talking about interest rates. Inflation is also on a lot of people's minds. So is Dollar Tree potentially a good inflation play? Well, it got some nice support at a round number of 160 today.
Yeah, so that's interesting. It's a little bit in between your moving averages, right? It undercut your 21-day, but it didn't quite get down to the 50-day moving average line. So this does look interesting. So far, I mean, it was respecting that 21-day, but this is still showing a pretty good amount of strength when you consider what a lot of the other stocks look like. This sticks out, and you see it exactly with that relative strength line, going into new high ground, really making some huge strides. So when you put this in the context of what the market is doing, Dollar Tree is looking very strong. So I think it deserves a spot on a watch list. Retail in general has been, really hard hit, but there are these pockets again, especially in the major discount and variety, the major discount chains. Those have been showing strength above everything else. So I think this is one to watch, but keep in mind, just like I said, we had a reversal a few days ago off of the 21-day moving average line, and it didn't work. So with this market, I think it's best to just be on the sidelines, build your watch list, and wait for kind of that confirmation, and then you're probably going to see a lot more of these setups.
Yes, a good name for the watch list. Totally agree there, Justin. All right, and we are going to continue to see more earnings this week. We talked about a lot of fertilizer stocks reporting earnings. Also going to hear from Marriott this week with an upside reversal of its own, trying to hold right around its 21-day line, just under a round number at 180. So, Justin, what do you think about the potential for a move here in Marriott on its earnings report later this week?
It's one that I'm watching, and especially because MasterCard and Visa last week were really positive on their earnings reports, specifically saying that travel was one of the places that they were seeing some strength. So, of course, that was something that kind of spilled over into a lot of the travel-related stocks, but they're not all created equal. I would say that the lodging area, Marriott in particular, is one that looks really strong. But this is just a reminder that while a lot of earnings reports are behind us, this is still going to be a very busy week. So you have to be keeping in mind that we have a lot of earnings reports that are going to be coming out. It's going to be busy in that regard. Plus, there's the Fed meeting. So you've got a few things to be keeping your eyes on before you necessarily go heavy into any individual stocks.
Exactly. And Justin, the last couple of times that Marriott tried to break out, it started to form a new base. Do you think that that is what we could see? I mean, it's always a possibility. We can't predict what the earnings are going to be like, but maybe we'll see another pullback here. Would that be a more attractive opportunity to get in?
Well, one of the things that happens sometimes, I find that the stock market often does exactly the opposite of what you think it will, just as you start getting used to something. So sometimes you'll get that breakout, oh, it doesn't work. The breakout, oh, it doesn't work. And then you get one final one that looks like it's not going to work, and then all of a sudden it does. Bill O'Neill used to talk about how John Wooden would talk about this in basketball, faking one way, and then going the other way, just as they get used to it. So sometimes the stock market might do a similar thing. So I think you just have to be open to the different scenarios. Be ready for it to go for a fake this way, but also be ready for it to kind of follow through and work. So I think, again, you have to be ready for both scenarios.
Yeah, I like that. Just like on the basketball court, this is something that Ed and I talked about on our last Barron's Live. You got to be, nimble for pivoting to offense and defense here. So in the same way, you got to be ready for those different scenarios with the stock action around a buy point. All right, everyone. Well, thank you so much for tuning in. And Justin, we have a couple of announcements because it's the first week of a new month. So that means it is scorecard time.
Yeah, that's right. We have a leaderboard scorecard that will be after the close tomorrow. After the Stock Market Today video, I should say, because we need you in there. So we let you do your Stock Market Today video, and then we pull you in for leaderboard scorecard. So that will be on Tuesday, tomorrow after the close. And then we also have the Swing Trader scorecard after the close on Thursday. So both of those are 1:30 Pacific time, 4:30 Eastern time. And we're going to just cover, hey, what was going on last month? What were we doing? How were we positioning ourselves? We did, for both of those products, get outperformance versus the S&P 500. And then we'll also talk a little bit about how we're positioning ourselves for the coming month.
Fantastic. And for the leaderboard app, there was a new little fun product release, which we will talk about for everyone. So that'll be fun as well. So we hope you join us tomorrow for that, and on Thursday for Swing Trader Scorecard. Thanks, Justin. Thanks, everyone, for tuning in. We'll see you back here tomorrow.